All right, welcome to everybody. Today we are going to be talking about market structure. Remember, we started with the basics of analysis, and this is where we're driving at market structure. So, just a brief introduction about market structure, what market structure is. Normally, giving an example with a general example, it's like a house, or I mean, in anything it has a structure. Everything has a structure. If you looking at it in the form of a house, you see the structure. It starts with the foundation, you have the walls, and you have the roof. So the market as well has a structure, and this structure comes in terms of trends. Okay, we call it the uptrend, the downtrend, and the ranging market. That's the structure of the market. The phases of the market. We have the uptrend and the downtrend and the ranging market. Let me put that down so that as we're discussing, let me put it this way: we have the uptrend. We have the uptrend, or you call it a bullish trend. Still the same thing. Let's say up or we have up slash bullish trend. Okay, and then the next one we have a down slash bearish trend. We have the down slash bearish trend, and then the third one we have a ranging market. Okay, we have a ranging market. So these are the three basic stages or phases of the market. Okay, these are the structures that are there in the market. If the market is not in an uptrend, it should be in a downtrend. If the market is not in a downtrend, it should be ranging. I'm going to go deeper to illustrate it with diagrams so that you understand better, and then we'll go to look at some chart examples. So I've given you the explanation. Market structure is simply the formation of the market, okay, how the market is formed. Like like the example of the house that I'm giving you. If they ask for the structure of a house, you can like, okay, this is the foundation, these are the walls, this is the ceiling, this is the floor, and so on. This is the roof. So that's how the market is. It also has a structure which deals with the uptrend, the downtrend, and the ranging market. What this means is, if the market is not ranging, it should either be on an uptrend or a downtrend. Okay, if the market is not ranging, if the market is not ranging, it should either be in an uptrend or a downtrend. If the market is not in an uptrend, it should either be in a downtrend or in a ranging market. Those are the three things, those are the three stages or three phases of the market. Okay, those are the three phases of the market. The market should either be in one of these phases. Okay, so I'm going to start to illustrate it to you. Now, the first thing that you need to know is that the market does not move on a straight line. Okay, the market does not move on a straight line. The market does not move on a straight line. So this is the more reason why we have these structures. Okay, because if the market was to be moving in a straight line, we wouldn't have a ranging market. We wouldn't have an uptrend or a downtrend. Like, we just have a straight line and so on. So it's moving like in waves, and we're going to be seeing the reasons why it's moving like that, reasons why the market is not moving a straight line, and reasons why the market will be in an uptrend, reasons why the market will be in a downtrend, and reasons why it will be in a ranging market. So first and foremost, let's start with a bullish trend. Okay, let's start first with the bullish trend. What is a bullish trend or an uptrend? This, just from the name, you will understand that it's something that is going up. All right. And now, since we know that the market does not move in a straight line, this is how an uptrend looks like. Okay. This is the formation of an uptrend. Now, if this is the formation of an uptrend, what are those things that make up an uptrend? Okay, what are the characteristics of an uptrend? Those are the things that you need to know, because if you don't know the characteristics of an uptrend, you might not be able to identify the structure of a market when you are currently on the chart, whether is it a downtrend or an uptrend. So there are things that uh, makes a market to be bullish. There are characteristics surrounding an uptrend. And the same thing now with a downtrend or with a down or bearish trend, just from the name, you understand that it's something that is going down, which means that you have something like this. Okay, the market is going down like this. Remember, we say the market does not move on a straight line. The market doesn't move on a straight line. So which means we are having something like this. Okay, the market does not move on a straight line. Like you can see from my chart here, it doesn't move on a straight line, right? So this is the same thing. This is the same thing on the charts. The market does not move on a straight line. So this is how a downtrend looks like. And now we'll go to a ranging market. How does a ranging market looks like? Just from the name, you understand that it's something that is tied in a particular range. Okay, it's tied in a particular range with a something like this. We're going to have price moving from the floor to the ceiling, from the floor to the ceiling. That's from the floor to the ceiling, and something like this. This is how a ranging market looks like. Okay, it's either not bullish or bearish. So this is a ranging market. When the market is not trending down or trending up, it is either it's going to be in a ranging market. These are the three phases of the market. And now, if you come into the market and you're not able to identify the current phase in the market, you will not know whether you are going to be buying or selling. Because first and foremost, for you to make money at this point, you need to be buying when the market is in an uptrend, and you are selling when the market is in a downtrend. Now, we have this common adage in trading, which says that the trend is your friend. The trend is your friend. Okay, this is something that you should keep at the back of your mind anytime that you are trading. The trend is your friend. It is very, very important. The trend is your friend. Why do they say the trend is your friend? This is because if you have a friend, you should be loyal to the friend. And if, at least if you have a friend and you guys are moving together, at least they used to say two people cannot work together if they don't agree, right? So it's the same thing here with when they say the trend is your friend. Now, why do they say the trend is your friend? This is because if the market is in a bullish move, this is the only time that you can buy, right? So if the market is going up, you can be buying. Okay, you buy, and then prices continue to go up. This means that you cannot sell in an uptrend. You should not want to sell in an uptrend. You should be selling in a downtrend. Okay, you should only sell in a downtrend. This is the reason why they say the trend is your friend. Follow the trend. If the trend is bullish, then go with the bullishness, be buying. If the trend is bearish, then you should be selling. You don't go against the trend, which is your friend, right? So you, as a trend, the trend being your friend, you have to stay loyal to your friend. If your trend is down, be going down as well. If the trend is going up, be going up as well. Now, what about the ranging market? With this ranging market, if you study the market and you see that the market is ranging, all right, this is where you sell. You sell at a high point like this. You buy at a low. You sell high, and then you buy low. Remember, as we said the last time, you cannot buy at a higher price and you cannot sell at a low price. So you only buy low and you sell high. You only buy low and you sell high. This is the reason why from here, this is where you can be selling. You cannot sell here. Okay, this is quite low, so you expect price to go back up before you sell, and then this is low, so you sell at this point, which is higher than this. Now, I think that that gives you a clear view of what an uptrend is, a downtrend, how they look like in a market. Okay, how an uptrend looks like, how a downtrend looks like, and how a ranging market looks like. Now we are going to go deeper into the characteristics of an uptrend, downtrend as well. Okay, so let's start with an uptrend now. As we're going, if you have a question, you can always leave it on the chat box and I will answer that. Okay. So let's go to an uptrend now. What are the characteristics of this uptrend? Okay. Let me draw the structure. Okay. This is what we have here. Then we have this. We have this. We have this. It's okay. So this in an uptrend is called a higher high, right? It's called a higher high. That's called a higher high. And then this on an uptrend is called a higher low. A higher low. Let me make it a little bit big. 16. 16. So these are the major things that you want to see in an uptrend, or you want to see in the chart before you know that it's an uptrend. So you want to see a higher high formed, another higher high formed, another higher high formed, okay, before you can confirm that that's an uptrend. All right. So you are going to see the market creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Now, this is how you easily identify this. This is how you easily identify this. Now, when the market creates a high, okay, and then it retraces, this is called a retracement. This is called a retracement, and this is called an impulsive move, an impulse move. Okay, this is a retracement or a correction. That means the market expands, it corrects, it gives you a correction, or it retraces, it expands again, or it gives you an impulsive leg, and then what again, it retraces, or it gives you a correction, and then again it gives you an expansion. Okay, once it gives you an expansion, it gives you a correction again, and then it expands. That's how the market is. That's how an uptrend is. So anytime you see price create a higher high like this, gives you a retracement, okay, and then it comes up to break this higher high. It is breaking this higher high now to form another new higher high. That's a signal that you are in an uptrend. Okay, that's an indication of an uptrend. Like you see the market constantly breaking higher highs and forming new higher highs. Okay, it's constantly breaking higher highs, forming new ones, constantly breaking higher highs and forming new ones. Now you will notice that these higher lows are not broken. Okay, they are protected, they are not broken. So all what the market is breaking with higher highs and forming new higher highs. Okay, so it's not coming back down to break a higher low. No, 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 no. It's breaking with higher highs and forming new ones, just like that till the uptrend is done. Now you also notice that the market will not trend forever. Okay, the market will not trend forever. The market will not trend for. Somebody said the Zoom is not responding. Are you guys seeing my chat and are you getting me clearly? So it is not possible to identify the exact price where the market will retrace. So it's not possible to identify the exact price where the market will retrace on the uptrend. It is possible, okay? Okay. So this is the formation of an uptrend. look at this very well, because this is going to be your assignment. You're going to look at this on the charts and you give me the assignment. So now let's quickly go to the chart and look at examples of this. Okay, examples of an uptrend. Now let's look at this point. Now one thing you need to know is that you don't need to force it. Okay, it should be very obvious. Now if you look at my chart here, you notice that price actually created a low here. Okay, went right up, created a high, it retraces, created another high, retrace. Okay, created another high here, retrace, created another high, gave a correction, and now you can see that we are still trying to go, or maybe to create another new higher high. So this here is actually an uptrend. Okay, which means that at this time we are just supposed to be buying. So what do we have here? This is called a higher low. Okay, you can just abbreviate it to be a higher low. This is your higher low, and then what do you have here is this is your higher high. Okay, higher high, higher high, stuff like that, and then your lower low, lower low, lower low, lower low, and so on. So this is how an uptrend looks like. This is how an uptrend looks like on the chart. So this is going to be your assignment. You go to the charts, you identify these swing highs and swing lows, okay, and you mark them. You can just put the abbreviation higher high and higher low. It should be obvious, okay? It should be very, very obvious. You should not try to, don't try to force a swing high or a swing low. As you can see here, it's very obvious. Price creating higher high, higher low, higher high, higher low, higher high, higher low, a higher high, higher low, just like that till the uptrend ends. Remember, I say the market will not trend forever. So as it's trending, it's going to change the trend to a downtrend or to a ranging market. So how do you know a higher high? How do you know a higher high and high what? So how do you know a higher high and higher low is gonna be formed? This is simply what I'm explaining here. Okay, let me do it this way. Let me give you this example. Okay, I want us to look at this example. So now this is it. This is what we have here. Okay. How do you know if a high high is going to be formed? So let's say the market is somewhere here. Okay. The market is currently up here, somewhere here. Now, normally we know that this is an uptrend, right? But now I'm not going to be telling you where exactly the lower low is going to form. That's a topic on its own. Okay, that's a topic on its own. Where this pullback will come back to end, that's a topic on its own. So we are simply just looking at structure. You don't need to know for now when price or where price will reverse from. Okay, that's going to be a lesson on its own. So what I want you to understand just now is that when the market is in an uptrend, you want to see higher highs and higher lows formed, higher lows and that is higher highs and higher lows formed. But now there are things that you will see to know when a correction will end, right? Like to know where this exact pullback is going to end, like from example, to know when this pullback here will end, know when this pullback will end, know when this pullback will end, and so on before it continues up. So those are the things we'll look into that. That's a topic on its own. So we are still looking at the structure. We are just identifying structure for now. Okay. So that's it for an uptrend. You can now see now. Let's go to a downtrend. Let's study how a downtrend looks like. Where's my writing? Oh, where is my writing? Okay. All right, let's study how a downtrend looks like now. Now we have a downtrend, a down or a bearish trend. We have a downtrend. So the downtrend is simply just the opposite of an uptrend. It's actually going back down. Okay, simply just the opposite of an uptrend. Please make sure you study this, you follow up clearly, because like I said, you are going to be having an assignment on that. So now this is how a downtrend looks like. Price is actually going down. And remember, I said the trend is your friend, which means if the market is going down, you should be selling. You should be interested in selling. So what are the characteristics of this downtrend? We have this high, which is called a higher low, a lower high, sorry. We have that as a lower high. And put it 16. This is a lower high, and then this is a lower low. Okay. Now, this is a lower low, and then this is a lower low. This is another lower low. And then we have this is a lower high. You need to understand these things. You don't have to cram them. You just need to understand how they are formed. Okay, so what do you have here? This is a lower low. Why is it lower low? Because it's actually lower than this and this point here. And then this one is a lower high. Why? Because it's lower than this, but higher than this one. So it's a lower high. The same thing here. This is a lower low. Okay, it's actually lower than this and it's lower than this. And this one is a lower high because it's actually lower than this, but higher than this. So it's a lower high. Remember, for an uptrend, we are having but a higher high and then a higher low. A higher high and a higher low. And the reason for that was in an uptrend, you have something like this. In an uptrend, you have a higher high and then you have a higher low. Why is there a higher low? Because it's actually higher than this, but it's still lower than this. So it's a higher low. Okay, it's actually high, but lower than this. So it's a higher low, and this is a higher high because it's actually higher than both of them. So that's how it is formed. That's how an uptrend is formed. So now, if the market is not in a downtrend, it should either be in an uptrend or should be ranging. Now, when you have a downtrend and you now notice the market comes back up to break a lower high, like it did from here. This break now like this, can put it break of structure. Have break of structure there. So we are having a break of structure now. Remember, the market was on a downtrend and it was interested in breaking bed lower lows. The market was breaking the lower lows, and out of a sudden, it started breaking a lower high. If you see this in the market, this is a signal that the trend is changing from bearish to bullish. Okay, when you see the market in a downtrend starts to break lower highs, that's a signal that the market is turning from bearish to a bullish trend. You understand? So those are the things that you have to put into consideration when you are looking at their chart. Now, remember I said for you to know where this lower high will end, that's a topic on its own. That's a topic on its own. But I want you just to familiarize yourself with how a downtrend looks like and how an uptrend looks like. Okay. Remember I said if the market is in a downtrend, it is breaking the lower lows and forming lower highs. Breaking lower lows and forming lower highs. And now, if you see the market break but now a lower high, creates a higher low, that's a signal that we are in an uptrend and the market will start to break but higher highs now and continue going up. And now, another point is if for the ranging market, for the ranging market, we call it a ranging market or a choppy market. Okay, we have a ranging slash slash choppy market. So we have a ranging market slash choppy. You can say it's a choppy market, or say it's a ranging market. Now, this one is not creating higher highs or higher lows. It's just tied in a trading range. It's just tied in a range. It creates a high, comes back down, creates a low, similar point, just like that. It's not creating any higher highs or any higher lows. Okay, which means that with this one, if you want to buy, okay, if you buy at this swing low, okay, you should be able to sell at this point, buy at this point, sell at this point. Now, why are you selling back here? Because the market has not broken any structure. Now, when the market is now in a range, okay, it will not be in a range forever, which means that it will suddenly get out of the range. Now, if it comes down and break this low, that's a signal of a downtrend forming. Okay, so which means that the market can come now like this and start a downtrend, or it can go up like this, break the high of the trend, and then start forming a an uptrend. So these are the phases of the market, and this is how it will actually look like. Putting everything together, we can have a trading range like this. The market will be ranging, and then out of a sudden it breaks out of the range, and then it starts forming lower lows and lower highs. Okay, it starts forming lower lows and lower highs, and then out of a sudden it breaks a lower high and then starts forming higher highs and higher lows, higher highs and higher lows. This is a cycle of the market. Okay, this is a cycle of the market. This is all you need to understand, so that you'll be able to know when you are trading. You should know the phase you are currently in. Okay, you should know the phase you are currently in when you are in the market. You should not be trading as if you are in an uptrend while you are in a ranging market. Okay, you should not be trading as if you are an uptrend when you are in a ranging market, or in a downtrend while you are in an uptrend. Okay, so now let's look at an example of a downtrend in the chart. Now look at this point here. We're currently in an uptrend, creating lower lows and lower highs. Let's see. Now we're currently in an uptrend, creating lower lows and lower highs, creating higher highs and higher lows. Okay, and now let's see how this goes. Remember, we say the market will not be in an uptrend forever. It's somehow going to start to change, shift. Now just look at this point here. What has happened at this point? You will notice that this is a swing low that you have. This is what? This is called a higher low. We had a higher low here, and now what happened? Price started breaking a higher low, and what happened? Our trend direction changed. We now formed a lower high, and now we have formed a lower low. That's simply how the market is. Okay, that's simply how the market is. As simple as that. It's just from structure to structure, from uptrend to a downtrend, or into a ranging market. Simply, we broke a higher low, and now price has now been in a downtrend. It's simply the explanation that I was giving the other time. Now let's see how a ranging market looks like. Let's see how a ranging market looks like. Now you can look at this point here. You notice that the market was barely going nowhere at this point, right? Now you have a very clear downtrend from here. Price creating lower lows and lower highs, lower lows and lower highs, and then it changed to an uptrend and so on. That's simply how the market is. Okay, so we have lower lows and lower highs in a downtrend, and in an uptrend we have higher highs and higher lows. Okay, we have higher highs and higher lows. That's how the market is. Those are the cycles of the market. Those are the cycles of the market. Okay, so I don't know if you have a question, you can quickly ask. I don't want this session to be long. What is the best time frame for identifying true trend? Because this trend appears also in short time frame. So please, at a higher high, am I supposed to buy or sell? No, 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 no. You don't buy at a higher high. You buy at a higher low. Okay, that's a very good question. Please, how do we going to locate higher high on the charts? So how do you know a higher high and a higher low is gonna be formed? Okay, I think I already answered that question. Like that's a topic on its own. Okay. So please, how are we going to locate higher high and high low on the chart? Is this is just simply what I've explained here, right? Now let's say this is your chart. This is what I want to see. You draw a line from this swing low, and then you put it there, a higher low, right? That's a higher low. That's actually a higher low. And then you see this, you put it, that's a higher high, right? You are looking at old price action, not like you are looking at what has happened already. You are looking at an old chart, not you should not be expecting you should not be predicting the price, just something like this. So this is what I want to see on your charts. Can just do this. This is just for you to, that's for me to understand if you have gotten the point clearly. This is a swing point. 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 Swing low, swing high, and so on. So that's simply what I want to see. Now the next question is, please, how? Please, a higher high and supposed to buy. Okay, are you supposed to buy on a higher high? No, you are not supposed to buy here. If you're buying there, you are buying very high. You cannot buy here. You are buying too high. Remember the first rule I gave you. You don't buy high and you don't sell low, which means that you are going to be buying on a higher low, not on a higher high. Okay. So if you see the market currently trading at this point, if you see the market currently here, you do nothing. Okay, you do nothing. You wait for the market to give you to come down, and then you buy. You buy cheap. You buy at a low price. Okay, you buy at a lower price. That's how business is. You don't go to the market and buy things very expensive. You have to buy at a lower price. Buy at a lower price. You don't buy at a higher high. You buy at a higher low. Same thing with the downtrend. You don't buy at a you don't buy at a lower low. You buy at a lower high. Okay. So the next question is, please. Okay. The next question we have here is, what is the best time frame for identifying true trend? Because this trend appears also in short time frame. Now, okay. Every time frame has its own trend. Okay, every time frame has its own trend. And now we have so many type of traders. We have position traders, we have swing traders, we have day traders. Okay, we have scalpers. Now, for a scalper uses 3 minute, 5 minute, 1 minute time frames. Okay, so which means he's going to be looking at his trend direction from the 1 minute, 3 minutes, and 5 minute time frame. Now, a day trader uses 15 minutes to 4 hour, which means he's going to be looking at his trend within the 15 minute, 30 minute, 45 minute, 1 hour time frame. A position trader, okay, a swing trader will be using the weekly chart and the daily chart and the 4 hour to be looking at the trend, right? And then a monthly, a position trader will be using the monthly, the quarterly time frame, the yearly time frame, and so on. These position traders are people that hold positions for months. Okay, they can hold a position for 5 months or a year. Okay, while swing traders they hold trades for weeks, and then day traders you can hold trades for 2 days, 1 day, 3 days. All right, and then for a scalper can enter now and close in the next 30 minutes, in the next 10 minutes. Okay, so which means that if you are a scalper and you have just 1 hour to trade, now you will not necessarily come to the 4 hour to be looking at to that's you will not necessarily want to identify to be trading the trend of the 4 hour. Okay, why is it so? This is because now let's look at something here very important. Let's look at something here very, very important. Okay, I want us to look at this particular point, this pullback here on a lower time frame. Remember, if you're a day trader, then you should have been buying at this point. Okay, you'll be buying here at this low. You'll be buying somewhere here. use a higher low, right? So that's where you'll be buying. But now, as a scalper is somebody that trades within 10 to 30 minutes, 1 hour. Okay. Now, a scalper would have sold from here. Why? Because if you go to the 3-minute time frame, you are going to see a downtrend at that point. Okay. Now, this is how the place looks like on the 3-minute. Now, you will notice that on this particular 3-minute time frame, we are having a downtrend. Okay, we are having a downtrend. So a scalper will be selling from this point. Okay, a scalper will be selling at this point. Even though we are in an uptrend, a scalper will be selling. Why? Because the scalper is seeing a downtrend. But now, something very important for you to note now is that even as a scalper, you need to know what the higher time frame is doing. Okay, so that if the correction should end, you should stop selling. You don't have to continue selling because you are seeing market structure on the downtrend. Despite that, even if you are selling because of this, you are seeing a downtrend, and then the correction on the 15-minute ends, you are going to start seeing a break of structure, start seeing price shift from breaking the lows to now breaking the higher highs. Like you can see here now, the price is actually going up, which means that at this point, even if you're a scalper, you will not be selling again. You instead now want to be buying, because what? The market is now creating higher highs. Okay. So even though as a scalper or a day trader, you always actually want to look at a higher time frame. Okay, because if you could not look at a higher time frame, you will not know that this is just a pullback that is happening. Okay, so you notice here that we had just how many 1 hour candles? 1, 2, 3, 4, 5. Only 5. That's 5 hours, right? If five hours. Now for a scalper, within that 5 hours, you'll be selling. But now, what if you were not looking at a higher time frame? You would not maybe have an idea that this is just a correction that is happening for the market to continue bullish. Okay, so it's always good to look at a higher time frame, despite even if you are using the 1-minute chart or whatsoever time frame that you are using. Okay. So I'm just trying to give you the basics. Okay, there is an advanced way of looking at structure that we're going to get into it. All right, which is switching between higher time frames and lower time frames. But just know that when you're identifying the structure, you don't have to force it. It has to be very obvious. The swing points, the swing highs and swing lows have to be very obvious. You should not force them. Okay. You should not force any swing high on your chart. All right. They have to be very clear. Don't try to zoom out to see a swing structure somewhere that is hiding and so on. No, it should be very clear. So there was another question. Let me see that if I can see that again. There was another question. What best time frame confirms the trend has changed? The time frame that you are currently looking at, okay? The time frame that you are looking at, the time frame that you are looking at your trend. All right. If you are having a trend on the daily chart, if you're having a trend on the daily chart, it should be the daily chart to tell you if the daily trend is done, not the 4-hour. Why is that? Because just from the example that we showed here, 1 hour is an uptrend, but 1 minute was showing us a downtrend at this point. So does that mean that 1 hour is bearish? No. Okay, so if 1 hour is an uptrend, even if 1 minute is showing us a downtrend, it doesn't mean that if the 1 hour trend has changed. If we want to see that the uptrend has changed on the 1 hour, then we should start seeing price start to break lower lows and creating new lower lows. Is that okay?